And you are live.
Hello, everybody. Welcome back to part two. We got booted out of Zoom again, and we just picked straight back up. Hopefully, if you're a subscriber to my channel, you would receive the notification. In part one, we were going through how to live without a bank and discussing some of my experiences in Hong Kong. If you can all hear me okay, please do share in the live chat. Welcome back. And hopefully we've got just as many viewers as we did in the first part. Yeah, I will wait just a little bit of time for a few more people to come in. If not, you can watch the recording obviously as well and head back to the beginning. To recap slightly, we were talking about Bitcoin debit cards, Bitcoin, and some of the decentralized financial products that are being built upon Ethereum, some of the risks involved in that, and some of the essence of the goals that is coming along so that we can transact person to person without the middle person. And when you have the middle person is obviously the middle financial institution, has, as a result of many legal changes, has had to have taken on the responsibility of policing the financial system due to regulations and legal changes. But we talked about stable coins. We talked about how to use your crypto as collateral so that you don't actually have to sell it. And then you can get loans with that and use them in stable value to make shorter term purchases. But everything is collateralized. So this is not lending beyond your means. Sorry, this is not borrowing beyond your means. This is collateralized loans from an economy that encourages savings, which is the crypto market. The next thing that really comes along is you being able to exchange. So if you've got your Bitcoin, you've got your ETH, you've got your stable coins, how do you actually go between those financial products? Well, that's where you have the middleman person again, right? You have the exchange. Well, the next innovation that came along was the concept of a decentralized exchange. And now a decentralized exchange, again, tries to cut out the middle company and just go back to transacting peer-to-peer. And the innovation has really been solved recently. There's been a lot of iterations of these decentralized exchanges, but now in 2020, we're starting to actually see much of the liquidity problem, you being able to trade whenever you choose, being solved as a result of this decentralized finance movement, really, really increasing and getting traction. So essentially, the way that decentralized exchanges work, and there's a few iterations of them. And as again, I don't want to talk about individual exchanges because I don't want to be seen as recommending particular services or endorsing particular services. There are different links that I can share in this where you can see a lot of these financial services. And remember, buyer beware, these are very nascent. There's risks involved in these. Smart contracts can have bugs and problems in the code. So this is not fully ready, for these have not been tested with much more than the entire DeFi ecosystem is about $10 billion locked up in these smart contracts. But the advantage of the decentralized exchange is there's no need to actually deposit your funds. So just like I talk about with banks, when you deposit your money with the bank becomes the legal owner of the money. They can spend it as they choose, and they can rehypothecate more than actually the more fiat money than exists. Likewise with an exchange. So I'm a shareholder in many of those exchanges, and they don't do that. They have good practices, ideally, but you don't really know. So as I said, I've invested in many of these centralized exchanges. I hope they have succeeded and become some of the best investments I've made. But also the decentralized exchanges is an industry I'm very passionate about making sure it persists for the reasons I've actually talked about. You don't need to deposit your funds with them. You can just make the exchange at point of, you can lock up your money and you can actually make exchange through a decentralized exchange, peer-to-peer, only when the liquidity actually exists. So it removes the risk of you having to deposit your funds. You can keep them in your possession, but then can actually only exchange those in a decentralized manner, peer-to-peer. So it removes the risk of having to deposit your funds. And when you deposit your funds at these centralized exchanges, as we have seen in the past, they are subject to it. They are a great hacker target. And being a great hacker target means that you're pooling all this money together into one honeypot, and decentralized exchanges removed for that. And also, because you're transacting peer-to-peer, you don't have anyone in the middle that needs to complete all the know your customer anti-money laundering obligations that a centralized institution actually needs to perform. And therefore, peer-to-peer is essentially putting that back so that you can actually transact and still remain legal in the way that that's actually happening. So once you've got decentralized money, then you've got decentralized exchanges, then you've got stable coins, which allow you to transact their value. You have on and off ramps into and out of when you're making purchases. The next thing that really came along was these decentralized money markets. And so what you're seeing right now is you having the ability, like I talked about and hinted about, where essentially these marketplaces, these decentralized marketplaces, can put together borrowers and lenders. You can lock up your crypto, you can take collateralized loans, and it makes a marketplace in a fully decentralized way without middle people where you can borrow and lend. This really is the world. I didn't know the technology that it would actually happen when I wrote the book Bank to the Future, but this is the world without banks. That really was something that I was really passionate about helping people to achieve. And now this is actually becoming a reality. So you can now borrow without actually having to sell your crypto, just by simply encouraging savings in a saving-led economy. So Bitcoin, because it has a fixed value, is what's known as a deflationary currency. Now, that's the opposite of what most people think. Fiat money is an inflationary currency, which means over time, because it's diluted away, you can buy less goods with your fiat currency and you have to work harder. The way that it's worked out in the Bitcoin market is that over that 12-year period, it's been the highest performing asset for 10 of the last 12 years. And it's been a deflationary currency due to its fixed supply, because the demand for money that you can own and money that you can spend without censorship in the middle has increased each and every year. And only 2 of those years has it been worth less than it was at the beginning of the year. And so it's really a deflationary currency, because if it goes the way, if the demand increases and the fixed supply, it gets more scarce over time. As more and people are locking it up, it becomes more and more scarce over time. And therefore, you end up with this force whereby your savings has been increasing, not saying the future equals the past, but if the future does equal the past, then each year, with the exception of 2, your savings have been worth more, and therefore you can lock it up. And you can receive more from when, based upon a collateralized loan without actually having to sell that crypto. And this whole new industry has come along for those savers called what's known as yield farming. So when you're putting these people together in a decentralized money market, whereby you can borrow and you can pay interest, that's being distributed to all the people that are being locking up. And yield farming is the new phrase for essentially seeking all these different money markets that are existing in the DeFi space, and seeking out the best interest rates, and really having lots and lots of different services, and that's allowing you to get the most bang for your buck when you're locking up your crypto. Now, finally, we're noticing, because this is an innovative space, there are horror stories around locking up your money, and there being bugs in the code and them not performing as intended. As I said, it's buyer beware at this stage. And so therefore, the next innovation that's coming along is decentralized insurance markets. So you can take some of that crypto, you can decide to insure people when these smart contracts go wrong, and you can actually start to receive the premiums for that. And you can see where this is going. Every single financial product that exists in the traditional centralized market will have a decentralized version. And the more and more that's being locked up into these smart contracts creates a more and more scarce supply as more people are taking their Bitcoin, locking them up. I wouldn't recommend, obviously, you doing this with all of your Bitcoin. And one of the things that I'll be doing when I release, I've been talking about it a lot, this free 4-part video series that I'll be releasing in October. I'll be going through how you as an investor can start to use some of these trends in a responsible way. And I'll be sharing exactly how I'll be doing that with $1 million of my savings, and how I'll be investing that during the Great Depression of 2020 to actually, play upon some of these different trends. And I'll be tying this all together in that 4-part video series, and working with clients over the next 7-week period that actually want to do this and implement this into a retirement plan. But these different financial products, as I said, I won't be taking all of my money and locking them up into these smart contracts. It will be done as part of a risk managed approach, and making sure that you're aware of what these different products are for in terms of, understanding the difference between these things. And so really the next wave is decentralized insurance, and we're going to start to see more and more of that. As I said, there are several risks. This is a nascent industry. It is buyer beware. You need to understand what you're doing. There are lots of people out there that will be trying to scam you, push you into pump and dumps, really adding very little value. But at the same time, there's some really, really genuine innovation that comes from this. And you end up in a world where you can fully operate all financial services without a bank. And that's a very exciting world that I look forward to actually this being something that more and more people can use. And finally, the liquidity is actually getting to that stage. As I said, pre-COVID, there was approximately $250 million locked up in these decentralized financial products. Now where we are today, this is being recorded, it's still in September. We're actually at about $10 billion being locked up within that. I do expect some casualties, some problems along the way, but I really like the direction that this is actually going. And finally, we get to actually see that you can use Bitcoin for what it's best at, use Ethereum for what it's best at, and the interoperability of these different products and financial products is really starting to go. You're starting to see things called crypto Lego, where people are starting to take these different smart contracts, place them on top of each other, because you can actually get that and you can see, where this is actually going. A whole buoyant ecosystem is actually going. And then when you actually want to spend that, if there's not crypto adoption where you are, then you've always got the crypto debit card so that you can get out into fiat at point of transaction. And really that means that there's just a complete way of operating without a bank and getting access to all these different financial technologies. Why would you want to do that? Well, watch the previous video that's got over 200,000 views in less than a week now, I guess, on why I think you should be taking your money out of a bank. And obviously I've got to disclaim that, not financial advice, not legal advice. But when I release the 4-part video series, I'll be sharing exactly what I'll be doing with $1 million that I'll take out of the bank, and investing in the way that I think it should, what I will be doing during the Great Depression of 2020. So sorry for the break in between. If you are catching this video right now, part 1 covered it at the beginning. We've had some technical issues that meant we had to reboot into part 2. But if you're watching this video and you like this content, please do like, please do share, and remember to head over to my YouTube channel, Simon Dixon, hit the subscribe button, hit the bell symbol, and you can get notifications from YouTube. We seem to be unshadow banned at the moment, not quite sure what's happening there, but it's great to actually see how many people want to watch this content when YouTube actually starts to share it. So all your likes help. Over 6,000 likes on the last video last week has really helped us to get this content out to more people, and look forward to doing that. So Azad, maybe we got some questions in the rest of this video before it actually expires. I think we've got about 20 minutes where we can do an AMA, and we'll take any questions that you might have.
Yep, I hope everyone can hear me loud and clear. Simon, you can hear me, I take it. So,
yeah, how many people have we got viewing live versus the first video? Has everyone come back? Or?
The first video we had about over 300. That's creeping up right now, so we've got about 230 people joining us. So welcome back and thank you. Yeah, so there was lots of questions in part 1, so I'm going to have to dig deep on that one. We have a few questions that we've received for this one. Let me just bring it up. Bear with me. Yeah. So we got talk about how to live without a bank if you are a digital nomad and have no permanent address. What services would you require if you don't have a residential address? I think that's the question.
Yeah, well, the beauty of the decentralized financial system is that you do not need to have an address because there is no middle person. You're transacting peer to peer, and therefore there is no, know your customer requirements because there is no middle person that needs to know their customer. You are literally transacting peer to peer. And so really this can all be done whether you have an address, whether you have documentation or not. And that's one of the benefits of that. So you can go traveling if we're not in lockdown scenario, if we're in a different economy, and utilize these financial products. Now, if you want to go off the grid and off the internet, then that's a completely different thing. Then you're still, trying to figure out how to store your gold in your rucksack, and then use the cash economies and whatever it is living off the land. That's not an area of expertise for me because I'm in the digital world and can't get it. Once you're on, you're probably not getting off.
All right. Thank you very much for that, Simon. What does Simon think of Kraken getting a banking license?
Full disclosure, I am a shareholder in Kraken. And I operate banktothefuture.com, which I am the CEO and co-founder of. And we did 2 funding rounds for Kraken on banktothefuture.com. And we have a secondary market where people can buy and sell shares. I think Kraken, so exchanges are essentially banks. And I think knowing Jesse Powell, the CEO and co-founder of Kraken, he is very much subscribed to the Bitcoin ethos. And I think that what he'll be doing with those banks, from what I know about Jesse, is figuring out how to use that in order to grow more adoption, more onboarding to the crypto space, but without actually using rehypothecation and actually without having to do some of that. Now, there are one of the Caitlin Long is a person. She's been involved in the crypto community for a long time, and she's been pushing forward legislative changes in the US, in particular the state of Wyoming. And she's actually creating a bank as well based upon no rehypothecation. So I'm really excited to actually see the opportunities of crypto-friendly banks built upon the ethos of Bitcoiners, and also start to see these different types of structures that can be done within the banking system, which really was what I tried to achieve way back in 2010 when I co-founded banktothefuture.com with Bliss Dixon. And what we were trying to do is achieve some of that. Now, a decade or longer later, we're starting to see some of those legislative changes and the growth of the crypto market, where we can start to see these crypto-friendly hybrid solutions, which I'm really, really excited about. As I said, me as an investor, I invested in 2 different theses. One of the onboarding and offboarding and centralized institutions that are supporting the growth of this industry. And I'm also investing in the hedge against that, which is the decentralized marketplace and some of the things that we talked about in this video. And I think the 2 will boom together. The 2 are necessary, but also they have their upsides and downsides, and it's just about balancing different risks.
All right, thank you for that. I think this is an interesting question. Does Simon see a token-based ecosystem growing in the subscription-based companies such as Netflix, Spotify, car insurance, payers you use, etc.?
So one of the companies that I invested in for their token was Telegram. And the reason that I invested in the Telegram, that didn't actually work out because it actually, in the end, there was SEC enforcement action, and they had to reach a settlement. But what was really interesting for me was they raised approximately $1.7 billion selling a token to institutional investors. And then when that the importance of that token to the ecosystem. So there was a couple of interesting things that came from that. The first was it went out to traditional money. So that was 1.7 billion that was going to be onboarded into fiat. That then once you get into the crypto market, once you get into the crypto market, it tends to be pretty sticky. So the interesting thing about these token economies, when they're actually sucking money out of fiat and driving people into crypto, and then once you're in the crypto market, you can start looking at all these different decentralized financial services and different types of products that come along. That's one interesting thing, is sucking money out of fiat into a savings-based economy. The second thing that it was actually doing is creating a new business model whereby Telegram, which is used by over 300 million users, that is a privacy-centric messaging application, is actually allowing for a new business model, which is Telegram didn't want to, it hasn't got a business model, just like Facebook never had a business model when it started. So it had to switch to advertising and selling you where you are the product, essentially. And then that creates a different disincentives and all the issues that we've seen with companies like Facebook as well, and what they do with that data. Whereas Telegram was going for a different model. If they could have launched this token, they would have held a lot of those tokens in inventory. And it was a model, it was a new business model where they could distribute those tokens. They could reward their users for using the application. And therefore, they could actually create a network effect. And if that network effect grow, the value of their tokens that they hold on inventory grows, then they never have to sell advertising. They never have to do some of the privacy infringing business models. And they don't have to figure out how to charge, which would kill the business model anyway, and everyone would move to a free version and forked version. So so in principle, I think it's really, really interesting. At Bank to the Future, we had a membership token as well, whereby our investors can actually get discounted access to deals, priority access to deals rather, through the Bank to the Future token. And people use it. If they pay with it, they get discounts when buying on our secondary market companies like the Kraken, SPV, and various other things. So different interesting models can be, if those are staked up as well, you can get rewards and bonuses. So there's interesting models that can come from that. But I do have to put in a caveat. A bunch of, 90% of the people using those were involved in pump and dump scams. And so it's really, really buyer beware with these things. I do think that we are going to, I think it's a bit early right now, but I think some of these decentralized financial products can also be used with more centralized financial products like security tokens as well. And I think you're going to start to see real disruption in capital markets. It did happen around about 2017 when we started to see the infamous ICO bubble, which is where lots of people were issuing tokens and people were buying them and they were just pumping, dumping them like crazy. But they were ignoring regulations. I think wave 2 of that is going to be where there actually securities operate within regulated sphere. And I think that some of these decentralized financial products can be used to solve some of the liquidity issues. And we've been investing and putting deals through Bank to the Future on those areas. So I do think we're going to get another wave of this. But again, it always comes down to making sure that people are issuing these tokens in ways that actually is sustainable as well. So there's lots of problems around there. Will companies like Netflix do that? I think that there's going to be lots of tokens within lots of these applications. We did start to see a lot of larger companies do that, but there are lots of problems with those models as well. And so what we started to see with companies like Facebook, when Telegram came along, they started to actually look at issuing stable coins with stable value to try and take out some of the speculative elements of people speculating on the token, and really focus on utility. But the regulators have been giving them a lot of grief and shutting them down, and inquiries and all sorts of stuff, because it's so threatening to the fiat currencies. When companies like Facebook can take their 2 billion users and put them into a ecosystem. But I do think US in the end will actually do that, because you've got countries like China where the central bank is actually issuing their own digital currency. And obviously, we all know from the Snowden revelations that the US government has a backdoor access to Facebook. And therefore, by allowing a company like Facebook to launch those currencies, they can get all the KYC, they can get all the data, and US can have a backdoor to this global ecosystem that emerges around the world. And so I do think that US regulators eventually will let these ecosystems prevail. If you look at, I've covered this during live when a lot of the Facebook announcements were being covered, and you can check out previous videos on my YouTube about this very subject on my YouTube channel.
Right, I'm very conscious of time. Unfortunately, it's because of Zoom, so we've got just 11 minutes remaining. What does a crypto bank look like compared to an online bank? And I think it would be great, Simon, if you give a bit of an update about the retirement plan B, as we had a question about you putting £1 million, investing 1 million of your own money.
I don't use pounds, I use dollars. I think pounds is a pretty bad place to have your savings. But in terms of fiat currencies, although dollars have had a bit of a correction, I do think that dollars is the fiat currency, because approximately 70% of central banks around the world and their fiat reserves are actually using dollars, and 50% of all transactions. And a pound was the previous empire, but I won't be. I only would be using pounds if that was the country where I would actually be spending that. In terms of dollars, then I'll be looking at $1 million of personal savings to invest in retirement plan B. That will be coming out in the 4-part video series. We'll be sharing all those details. But I think there was the original question was the difference between a crypto bank and a normal bank. Really, it just comes out, that's a very broad question. There's lots of different types of, so a bank is by definition a centralized institution. It means that when people deposit money, they can actually rehypothecate and use it to issue loans and create money if they're a clearing bank. There are banks which actually have more of a trust structure as well, whereby they don't rehypothecate your money. They just simply, you have to actually, they hold the money, and then they put some of that money into the money markets and conservative markets, treasury markets, and then they actually take the interest of that if they have permission to put in different loans. So they're not actually rehypothecating and issuing loans, and they may be sharing some of the interest. It's like how people think a bank might work. Before they understand how a bank really works. Then you have companies that might be starting as crypto businesses, like we were talking about Kraken, that might be applying for banking licenses to do additional services. And then you can have the intersection between your fiat money and your crypto, and you can go in and out and they can create better user experiences. But then there is the decentralized financial services, which really just isn't a bank. It's just peer-to-peer finance. So the main thing that a banking license gets you is the ability to actually create a digital currency every time you issue a loan, if it's a clearing bank. But then there's lots of different models that sit on top of that as well. So I think we've got time for one more question, and then we'll wrap it up there.
Yeah, and I think this is an interesting question. Does Simon think US banks will create fake fractionalized Bitcoin notes to sell to customers?
We will, just like we have in the gold markets. You will have paper Bitcoin, which is or paper gold, like you have, where there's more paper gold than there is gold. And I think you're already starting to see that, where derivatives will be used to create more Bitcoin through the paper futures markets and various other things, which is contracts that give you entitlement to Bitcoin than actually exist. Will they be using fractional reserve Bitcoin? It depends. If they start issuing Bitcoin denominated loans, which is a ultra dangerous thing to do. Don't confuse that with Bitcoin collateralized loans versus Bitcoin denominated loans. borrowing Bitcoin and having to repay the same amount of Bitcoin, unless you're a financial speculator or a hedge fund and you're doing that for a short-term trend. But if you're actually trying to borrow Bitcoin, go out and spend that, that historically has actually exposed people to some of the craziest trends. And really that was the problem behind the original exchange that went wrong, which was Mt. Gox, the very first one in 2010-11. Essentially, it didn't have enough Bitcoin to meet the obligations of all the Bitcoin that it had. And it actually started to, it was short Bitcoin and then bought Bitcoin, it was borrowing Bitcoin, then it went up like crazy and then it could no longer repay it. The interesting thing about Mt. Gox is actually bought it short Bitcoin accidentally when Mark Capellas bought it off the founder of XRP Ripple currency. So that's a bit of trivia for those of you that don't know the history of that. Borrowing Bitcoin is a really bad idea if you're going to go out, exchange it to fiat, spend that. The collateralized model is a better way of doing that and less dangerous for your savings. What was the original question? I think it was.
So the original question, Sai, is does Simon think US banks will create fake fractionalized Bitcoin notes to sell to customers?
Yeah. So if they start actually issuing Bitcoin loans, then in theory, they could actually create paper versions of Bitcoins, and regulations could actually do that. I don't think they will be doing that. I think more likely the decentralized and locking up collateralized market will be producing a savings-based economy rather than that. But you certainly will start to see the paper Bitcoin markets being used just like you have in the paper gold market. But there is a huge difference between paper gold and the actual physical gold that you actually own. I actually talked about this in an interview I did this morning with the Market Sniper, which will be coming out in a couple of weeks as well. So I think that's the last question. Next week, I promise that we'll actually get this where we don't have a cutting point in the middle. Thanks again to everybody for the over 200,000 views and likes and shares and the 6,000 likes on that. If you enjoyed this content, please do like it. Please do share. Your support is actually really, really helping us get this message out to more people, which means that we can create better and better content as well. October we'll be releasing that 4-part video series that we've been talking about on how I'll be investing $1 million of my personal savings during this Great Depression of 2020. The video series is all in production, all in mode. It's all been recorded and the animators are working through that at the moment. So really looking forward to bringing that to you. Also those that are going to be doing the follow-on program we'll also be going through all the tax side, the inheritance side, the retirement plan B strategies and all the stuff. There'll be options for everyone. So really looking forward to bringing that to you. And remember, no matter how bad it gets, you are alive at one of the most interesting and exciting times in financial history. It will be disastrous for many, unfortunately. And the more people that get to watch these videos, I hope that the information that we can give you gets you to think about how you will be more prepared and get on the right side of those trends. And I look forward to seeing you this time next week. Tweet me at Simon Dixon Twit. Let me know what you would like to see in the next videos. And if you didn't get your question asked, use the comments below in this video. We'll return to those comments and decide what to cover next week. And I'll see you this time next week for the AMA. Thank you, Azad, for taking out those questions. Thank you to the audience for providing those questions. I'm really looking forward to the next stage.